Ellen McGonagle, founder of MEM Investment Research. Today we're going to be talking about the market reset, and we're going to share with you a trader's guide to what we're anticipating going into the second half of 2025. Bit of background for those not familiar, I do have quite a bit of experience both on and with Wall Street. I began my career at Goldman Sachs on their fixed income trading desk. Quite exciting. From there, I went on to the asset management side. I managed over $2 billion in assets, and certainly beyond that, I moved out to the West Coast, joined William O'Neill and Company, and worked with top portfolio managers, advising them on the broader markets, as well as stock selection and the methodology of O'Neill. And for those of you familiar, you know he is the founder of Investors Business Daily, and the system utilized for that, plus the area that worked with directly Wall Street, it is a system that uses a proven methodology that goes back historically over many market cycles, and over that time, the leaders are identified, and beyond that, the common characteristics among those leading stocks. And the characteristics remain true to this day. I will share with them as we move through today's presentation. And then also I do host a weekly show on stockcharts.com on Fridays, and with MEM Investment Research, I am the author of a top performing newsletter twice weekly. It is known as the MEM Edge Report. So let's go ahead and get started today. I'm going to begin by sharing with you my approach to investing in the markets, and the purpose here is to mention that I do have a system that I use, and more importantly, hopefully it does align with your approach to the markets. But again, it is very much based on historical precedent, and it has served me very well over the years. First up, I do want to identify stocks that are poised to far outpace the broader markets. And the way that's done is initially by using sector rotation and industry group rotation to pinpoint where to focus for that stock selection. The purpose is, or the reason is, that your sector and industry group participation is going to account for almost 50% of the price appreciation or depreciation of your stock. So you want to make sure you get that right. From there, I screen for stocks that are in that sector or industry group that are technically and fundamentally strong. And as we move through, you'll see what I mean by that. I am, in essence, going to be on the lookout for what are called base breakouts, coupled with companies having high earnings and sales, which in turn will drive that stock higher. So some of the biggest winners coming out of this bear market with my MEM Edge report, we are looking at Roblox RBLX, a gaming-related platform software company, and we did add the stock to my MEM Edge report in the latter part of April. One of the reasons that we're attracted to the name is because technically we broke back above these simple moving averages, and then we also had a positive RSI and MACD, so technically we are in a sound position. We did also execute a nice 1-month base breakout, and you can see that we have advanced quite nicely beyond that. Another name on our list is Cloudflare and ET, another software stock, cyber security related. And in this case, we added it after the company reported very strong earnings above estimates. The stock gapped up on heavy volume in response, and hence we added it. Also, we had a positive RSI and a positive MACD, which helped propel the stock quite a bit higher. Now, taking a look at the markets, you want to have a really good sense of where we are currently and this past Thursday, we did hit another new high for the S&P 500. We do have a positive RSI and a positive MACD. So at this time, the near-term uptrend for the broader markets is in place. And that's going to be another key ingredient as far as putting money to work. You want to make sure that we are in a healthy bullish phase as opposed to this recent bear market. Now, as we look at the future, we want to be aware of what took place in the first half of this year. And some of the most impactful elements have been key policy shifts in Washington. That is having everything to do with new heads of different departments, healthcare and others among them, really driving price action in those areas. Less regulation in banks was good news for them. And then also trade war and trade conflicts were a big part, certainly, of entering into that recent bear market as inflation fears spiked and the sense that we could get into more conflict drove the markets lower. We also had geopolitical conflict. This is going to be the Middle East, Israel, and Iran. Luckily, that was really quelched rather soon, which was good news. And I talked about the inflation and interest rate fears, all about tariffs increasing cost, and that did drive the markets down. At this time, there is a sense that inflation is leveling off and that interest rates are receding, so that is good news for the markets. And then last up, as always, earnings season and earnings reports are going to be a key driver of your stock, either to the upside or the downside. So moving through, I also wanted to mention that as it relates to the broader markets, AI-related stocks did and are still exhibiting the most strength. That's where we're seeing most of the vibrancy. The two names that I shared with you earlier are very much entrenched in using AI in their products and in their systems. So we're looking here at a daily price chart of Palantir Technologies. The stock has been a real winner of late. They are heavily AI related. They work primarily with the U.S. government, with some of the defense departments and other departments as well. We added the stock to our near-term buy list at the end of April. Again, we had that gap up into a cup with handle base breakout. We had a positive RSI and MACD, and then also bullish fundamental news as well. Of note is the fact that we originally added Palantir to our long-term buy and hold list in June of 2024 at $25, and the stock has advanced quite a bit since then. Now, talking about earnings growth being the biggest driver, we are looking here at a 2-month daily price chart view of the Magnificent 7 stocks. I also added Netflix in there, so that's why we have 8 stocks. But this particular list is sorted by relative strength in descending order. What I wanted to highlight here is the fact that Microsoft is up here at the forefront among these M7 names, all about coming out with strong Q1 earnings. And also the company among these M7 names is most firmly entrenched in AI. It's been a big driver, 175% growth in their AI derivatives relative to last year is what the company is on track for. And then, of course, we have NVIDIA, a big player in AI with their advanced chips. From here, we can see Apple. Now, this is a recent advance. It had been underperforming most of this year, but last week, the stock was up about 6% due to AI initiatives with their iPhone. Amazon sitting up here with a new high in price. This is another AI-related company in addition to their retail space. And we can see areas that are in the weaker quartile. Meta has been spending a lot on AI, but not as vibrant in their returns quite yet. Investors want to see growth relative to that spending. Other areas that took place, or certainly movement in the markets in the beginning or first half of this year, is the fact that we did see volatility spike on several different occasions. Now, this spike back here is at the end of December, but it did take us into the beginning of 2025 as fears relative to policy changes going into this new administration did see a big spike, and we also saw a pullback in the markets. We also had problems in March, again, policy related, and fears as to where that would reach us. When we got into April, trade war fears did pick up quite a bit, and we saw volatility spike. And of course, the bear market did proceed beyond that. So taking a look at one of the key components and characteristics, we did have a very volatile first half of the year as investors tune in and really come to terms with what may be happening, certainly in Washington, as well as the Mideast and elsewhere. Now, first quarter earnings, I talked about earnings being a primary driver, and this year for the first quarter, companies did show earnings that were 78% of companies came in with earnings that were above estimates. And this is indicating underlying strength despite that volatility that we just saw. So a large majority of the S&P 500 companies are coming in with earnings ahead of estimates, and that first quarter number was above both the 5 and 10-year averages. So again, we are in a expanding period for corporate growth and certainly the economy as well. Now, let's go ahead and take a look at what I anticipate to take place for the second half of 2025, keeping in mind what has taken shape in that first half. First up, we're looking at the S&P 500. Now, this view is taking into account price to earnings multiple expansion. And we did get quite an expansion toward the end of 2020 with stocks coming out of that COVID era bear market and really moving to new heights. But more importantly for today, I wanted to share with you this black line, and it is expressing what the S&P multiple expansion is expected to be going into the second half of this year. As it relates to the actual performance in the S&P 500, there is an average advance expected up to about the 6,300 level, a 5 to 7% increase relative to where we are now. Now, of course, earnings will move that needle, but this is where we stand right now. And then also fully anticipating AI to continue to be a driver among those leading stocks. We have seen exponential growth in AI market as we continue to see advancements in data analytics, automation, robotics. Any number of areas are benefiting from the increased usage of AI or artificial intelligence. Now, looking at estimates, global AI spending is expected to climb from $235 billion in 24 to $630 billion in 08. So in other words, we are going to continue to see growth in this area, which in turn will help stocks in the AI space. Now, some of the key stocks that are poised to benefit from a continued advance in AI will be, of course, semiconductor stocks. I'm highlighting Taiwan Semiconductor, TSM. This is a company that we added back to our suggested holdings list back here in this beginning of May period. The company is the world's largest manufacturer of semiconductor chips, and they are partnered with NVIDIA among many other key players. And upon this advance coming into the beginning of May, we did have that RSI turn positive, as did that MACD, and it is on track to continue to trend higher. Next up, we are looking at a chart of Microsoft. I shared this with you as it relates to those M7 names. Microsoft is at the forefront. They came out with great numbers. Again, they are monetizing their move into AI, which is what investors want to see. The reason I'm highlighting a long-term monthly chart is because we've had quite an advance in Microsoft. So on a daily or even a weekly chart, the stock will be and is extended with that RSI up above 70. So we may see a bit of a pause, maybe a small pullback, but in the end, the overall long-term trend remains bullish. We had that MACD crossover, which is constructive. And then we can see historically that the stock has that predisposition to go on to far outpace the markets, given the backdrop of strong fundamentals, which they have in place. Looking also at data center growth going into the latter part of 2025, it is of note that these data centers are what are propelling this AI data analysis, and they do remain as the backbone of this modern economy due to the rise in the usage of AI. Global data center construction is at record levels. The vacancy rates there are at about 2.8%, which is very low. Also, we can note that data centers do take up quite a bit of electricity. 2% of that global electricity does not sound like much, but when you get into some of the states, particularly in the US, the local impact can be 10% of their electricity output going toward these data centers. So what's happening is power demands are far outpacing supplies. So we can talk about how that's going to impact the markets into the second half of 2025. First up here is another stock from my MEM Edge report. It is Quanta Services. We're looking at a weekly chart. We did add the stock back coming out of that bear market, and on the weekly chart you can see that we have advanced quite nicely. The company is a major player in the data center industry, helping with construction and many other facets. We can also see on the weekly chart a positive RSI and a positive MACD. We are dipping into that overbought area, which we are doing currently with many winning stocks given their recent advance, but net the uptrend still remains firmly in place. This stock is in the heavy construction industry group in the industrial sector, and there are newer names that are coming into play in this area. As it relates to looking at what took shape in the first half using industry groups and using ETFs, I anticipate a continuation of a recent rotation into areas that underperformed in the first half of the year but are beginning to pick up. Now, again, this is the ETF sorted by strength. As we move through, I'm going to share with you areas that are newer in their uptrends. And first up is the Russell 2000 small cap. IWM is an area that is anticipated to continue to advance. Also, retailers, they've only recently come into their own with a base breakout last week. Another recently lagging area, but certainly looking compelling, are home builders, XHB, that have been down and out in the first half but are coming into their own. And then last up, on the lookout for biotech names to continue. This has been a big underperformer in the first half of the year. Look for the group to pick up. It is a risk off area so that when the markets are in a more bullish phase, they will fare well. And then also a lot of the advances taking place in the biotech space are due to AI initiatives. Let's take a look at the bigger picture, broader market. And I talked about policy shifts being a key driver as far as the broader market's headline news relative to that really pushed stocks around. And what we can look forward to in the second half of the year. What is shaping up is a continuation of shifts in policy. There was put in place Project 2025, and this was Trump's initiative. He has 35 initiatives in total, and they range all through the certainly corporate world, but also government policy, federal workers, bureaucracy, also relative to strict abortion laws and so on. But today I'm going to share with you some of the items that are expected to make headlines going into the second half of the year. It's anticipated that Trump will prioritize domestic fossil fuel productions and then roll back the environmental regulations. So look for moves in energy stocks. Also, there is a sense that there'll be a continued reduction in regulations across various sectors that will impact businesses. We've seen reduced regulations in banking, which has helped that group. Going into the second half, we may see energy and other business areas being impacted. And then also, it is anticipated there is an intent for Trump to expand his presidential power and centralize his control over the executive branches. And this certainly could be an area that would increase volatility if it begins to come to fruition, but it is of note. And then also a continuation of that protectionist approach to the trade and tariff negotiations, and that's another area to keep an eye on. Of those 35 initiatives cited in Projects 2025, only 2 of them have been completed. Most of those projects are still between 0 and 50% completed, so anticipate news out of Washington to continue to drive price action. And as we move through, again, to confirm, be on the lookout for continued volatility, not only because of policy shifts, but also the markets do need a period, certainly, of at least a pause as they digest the sharp gains coming out of that bear market. I would use leadership or pullbacks in leadership names as an opportunity to add to positions, provided nothing major has shifted in the markets. And then you want to make sure you have an exit strategy so that if that pullback is something more that could lead to a downtrend, you will be able to safely exit. And then, as always, pay very close attention to earnings season as your guide. Are companies coming in above estimates, and are investors responding bullishly to positive results? I did want to share with you a special with my twice weekly MEM Edge report. It is at this time only $7. You can gain instant access and a 4-week trial for $7. There will be a link provided for this, and I do hope you take advantage of that so I can share with you names that are on track to far outpace these broader markets.